Good afternoon, and welcome to today's webinar. I'm James Vann with Vann Attorneys. I'm one of the attorneys here. We practice in North Carolina, as most of you know, and today we're going to be talking about fraud with payment. So this has been, we've seen an uptick in this with our clients, and we felt like this might be a helpful topic for you. And given the number of people that have signed up for today, we think it probably will be. So we're going to be talking about how to spot and resolve payment scams. And if you have questions, you may submit them two different ways. You can send them either through the GoTo webinar control panel on your screen, or you can email it to webinar@vannattorneys.com. And again, we really hope this is helpful for you. If you ever have an idea for a topic or you wish we would cover it, please email us. We'd be delighted to figure out how to talk about that. So let's look at what we're going to be talking about. What are typical payment scams? How do most scams work? Examples of those, and then just a very brief look at red flag policy and law. We've talked about that actually very recently this year. But we just included the slides in case that would be helpful for you again. So with that, let's get started. So we're going to be looking again at the topics here. Before we get into this, I want to give you just a little bit of information that we found in prepping for this. And this was from a 2021 Association for Professionals that they believe 65% of the Treasury and finance professionals believe that the COVID issues is to blame for some of the uptick in the payment fraud with their companies. They also found that business email compromise continues to be the primary source for the attempted or actual payment fraud at 62% of those companies. So again, a fairly large group of those believe that that's where it's coming in. They also, the accounts payable departments are the most susceptible to business or email fraud. And I don't know about you, I mean, we get a ton of email, and you know, we all have to be very, very cognizant of what we click on, where we go, what we look at from, you know, any kind of emails that you get, because some of them look very legitimate, right? And it's just wrong. It's a fraud, it's a scam, it's something to get you to put information in, or they're then writing on your computer, looking for things that they can take advantage of. 61% of the respondents reported that the accounts payable department is probably the most often vulnerable to business email compromise. And it really depends on your business and how large it is and who you serve. Some of the survey information that we saw that was actually talking about universities get hit pretty often and hard in that respect. And I think probably based off of what I could read, it looked like because the departments were so large, there are so many people in the different departments, and they're buying typically the same type of stuff. And y'all might have encountered this as well. We just want to go through a couple, I think it's about maybe 4 or 5 examples that we've seen with our clients recently, just to give you the heads up, right? I know many of you are members of trade associations for your industry. And I know you get a lot of reports or emails when there is a scam going on within that organization. And I would tell you to really pay attention to those, because we all know, right, because of just the reliance on technology, that's not going to go away. Your customers are using technology to communicate with you more often today than they did a year and a half ago because of COVID. People can order things typically off your website or by calling in, and it's just a whole lot easier today than it was maybe 2 years ago. But this is an example of something that just recently happened. So a customer sets up the account with a supplier, with a creditor for product, right? And so all the account information looks legitimate. The account is open, product is ordered and delivered. There is some payment that's made, additional product is ordered and delivered. More payment is made, not 100% either time, but enough. More product is ordered and delivered, and then the communication with the customer stops. The creditor pursues payment. The customer then reports that the account has been used without their permission. This is a very legitimate case that we actually helped a client with, and it turned out to be a family member of the actual customer. So they had all of the information that they needed to make it look like the customer was actually buying the goods, right, and making the purchases. But in fact, it was the family member that was actually doing it. We found out that the family member that owned the account, or whose account was being used, had actually stopped doing business. And we didn't know it, or our client didn't know it. And this family member took a large advantage of their family member, which is really wrong. But we were able to sue, get a judgment, and we're working on getting that collected for our client. But that's a real story, right? And how would our customer know that, right? Well, typically it might be the sales group, it may be other relationships touching base with the customer, to say, hey, look, the account, because I know as they've made payments, it didn't go to zero, and those numbers kept getting older and older and older. I don't think they had the conversation with the customer. That probably would have resolved it, or at least shown, hey, look, I haven't been ordering anything, right? But that's one example. Here's another one. This just happened. The customer calls in for a purchase. It's going to be COD, right? So the customer calls in. They don't have an account, but they give enough information. They said, look, we'll pay for it cash when it's delivered. The creditor said that's fine. So the product is delivered. The customer calls in with a credit card before the material is dropped off or left. So here's what's interesting. The purchase is not approved, right? They give the credit card number. The creditor's running the card, back at their corporate office. It wasn't approved. So they give a second credit card number, and they use that. Again, guess what? Not approved. Well, finally, I think everybody's frustrated. The truck is there to deliver the materials. Customer is in the field wanting the materials because they need it, right? And they're calling in and saying, hold up, look, we've got another, one of the owners of the company, the business that's trying to order the materials says, look, one of the owners of the business has given us his personal card so we can use that and make sure it goes through. Well, it goes through, right? Well, several days later, the creditor is contacted that there's a fraudulent purchase and use of a stolen card. So they actually reversed the charges after they did some analysis. They realized that was true. So we're chasing that for them, right? And it's just one of those examples of realization, right? Everyone today is so busy with the economy and trying to make sure that you're serving your customers. A red flag in this case never popped up, right? Well, third card, and we don't really know this customer, but they had enough communication with them by phone that they felt comfortable. So again, that's just an example. And again, we all can look backwards, right, and say, golly, I can't imagine me doing that, right? Well, let's just face it. Hindsight's 20/20. We all know that. And we all have probably done things in the moment we thought makes sense, right? It works out. It's okay. So understand this: most scammers are trying to use methods of payment that cannot be traced today, right? So if it's Bitcoin, I don't think any of y'all are taking Bitcoin yet. At least if you have, I haven't heard about it. Again, tracing it's going to be difficult. Checks are still being issued and they're bouncing, right? We know that. And other forms, credit cards, debit cards, those kinds of things seem to be on the rise for scams. Here's another recent one. Customer orders merchandise or supplies from the company. They arrange to pick it up at the counter, right? So they're going to show up, pick it up at the counter. Again, this is a customer that they know. Pays by credit card or debit card that is not their own. They don't, again, the creditor doesn't know that at the time. Sale goes through, right? Payment processing rejects the sale after the customer's left with the goods, right? Because they've already paid for it, it cleared. All of a sudden, that's a fraudulent card. I understand. I was trying to think who I was talking to about this. I was talking to a friend of mine who works in computer forensics in the crime areas, right? And so this person was telling me that you can go online. I've heard this, I haven't checked it out. I'm afraid to search it, frankly. That you can go on and buy credit card numbers, names, like in bulk. It's on the dark web, supposedly. I haven't Googled it or researched it on another website or search engine because I don't want to do that, quite frankly. But I understand that's legitimately out there. Here's another one that we have heard of recently, where the customer sends a PayPal or other electronic payment that is actually more than the purchase of the order. So, for example, let's say they owe $10,000. They send the payment in for maybe 12, 13,000. Customer asks you to wire them the difference, right? Oops, made a mistake. It was, I thought we were supposed to pay for shipping or whatever. Oftentimes, the scammer has paid with a stolen credit card, in that case, through PayPal or the bank account or checking account. That's stolen information. So again, if you advance by wire transfer, then you may be out of it, out of the funds. This is another one that's recently happened for one of our clients. A customer orders materials and supplies and directs that the shipment be sent to a location different than their normal location, right? Oftentimes this is outside of the normal service area. So for example, let's say it's Raleigh, North Carolina, pick a city or town, and they want it shipped to, say, maybe Richmond, Virginia, or an area that you serve but not one that you normally serve, right? And they're willing to pay for it. Or the customer orders materials and supplies and directs that shipment be sent to their location, and then after it goes through, the customer calls back and says, "Oh, well, let's change it to another location," and then they pay with a stolen credit card. That happens. We've heard of that quite often from some of our clients. Another one is customer orders materials and supplies. They open a bank account. The customer does, with insufficient funds. I still cannot believe this happened. But the check had not cleared yet. The customer starts writing checks for amounts under $500. The checks go through, right? I mean, I know some of you have scanners that you can run your checks through. They clear until they get to the bank. And the bank then says, oops, the funds that they used to open the account were insufficient. That check bounced, and therefore all the other checks bounced, right? And that person had written a bunch of checks on that initial deposit. I still cannot believe that bank did that, because normal times they will not let you start writing checks. They won't. It's just not going to happen. But they did, and it happened on this one. So those are examples, right? So if you're looking at your checks and it's check 101 or 105 or 110 or 001 or 002 or something like that, heads up, eyes open, right? The reshipping scam. This happened to one of our clients last year. The individual or company is recruited to receive merchandise at their place of residence or business. They repackage it and send it back off somewhere else. They don't know that the merchandise was purchased with a fraudulent credit card. One of our clients did that. Actually, they didn't agree to it, but what happened was this group ordered like 10 cell phones. Our client had no idea. They got all the cell phones like one day by FedEx. And immediately, the moment that they got it, they were tracking the package. Someone called our client and said, "Oh my gosh, I apologize. I sent it to the wrong address. Would you please just repackage those cell phones and send it to this address?" Client thankfully went, something's not right. So they started backtracking, and sure enough, those cell phones had been paid for with a fraudulent credit card, a card that had been stolen, and they'd done it under our client's name. So then our client starts getting collection calls from the provider saying, "Hey, you bought 10 phones and hadn't paid for them." He's like, "No, I actually called you and verified it, and they actually sent the phones back to the vendor." So just, it's heads up, slowing down a little bit. And look, I know everybody is just running as hard as they can. I get that. But just trying to keep your head up and your eyes open, and then think through some of those factors. I hope it is helpful to you. Those are some examples, right? This one's another true case that happened to one of our clients. And I don't know if y'all, saying about this after we put it in, I don't know if y'all wire funds very often, but if you do, you really, really need to be careful about this and slow down. And if you have dealt with us when we wire funds to you, if you send us the wire information, we will call you back on a number that we know is a good number, not the number you provide us maybe in an email, to make certain that the information is correct. So what happened was the company was to wire the funds for payment, right? The creditor sends the wiring instructions for the paying company. That email was intercepted by a third party, and they changed the payment information to a different account, different bank, right? Then they send the email through to the company. The paying company does not verify the wire instructions by phone before they send it. So let me tell you one other really crazy thing about this case. In the email, right, the company that is supposed to, that's receiving the wire, says in here, do not accept any changes in wiring instructions unless you talk to us. And we ask you to please call us to verify it. They say that in the initial email. Company didn't do that. They went ahead, they got the wiring instructions, and they sent a lot of money, y'all. I mean, a lot of money. Guess what? It got intercepted, it got changed, and I think it was 500 grand got sent to a different account. Now, they've recovered some of those funds, but not, I don't even think it's 50% yet. We've gotten hired to help get the other remaining portion. This is evidently a huge problem, especially like real estate closings or other transactions. And you know, wiring funds, once they're gone, they're gone, and it's very difficult to get them back. So pick up the phone and call the number that you know is accurate. Please don't depend on what the email says. Call a number that you know that's accurate for that company and verify with them by phone, this is the wiring instructions, right? Because you want to make certain that you have it right and it hasn't been changed. So, I mean, those just happen. Here's another recent scam that we've learned of, the purchase order scam, right? So the existing customer with a creditor, the creditor receives a purchase order from what looks like to be their existing customer. It comes in by email. The purchase order delivery address is different than the address of the company. And the email that's used for the customer was off by one letter. So again, the people that are running the scam make it look like it's your customer. It's their logo, it's everything about it looks right. But the email, one letter in the email address is different. And it looked totally legit. Unless you really study it, right? It looks very legitimate. And I don't know if y'all have seen those kinds of things. It's amazing how creative these people are in running these scams. So just be really, really careful about that. And I mean, it's to the eye, you would never have recognized it. You had to look at it and literally go letter by letter, right? But that's what happened. So I want to just give y'all some proactive tips to be thinking about, right? So use your gut instinct. Use the knowledge that you have, the experience that you have, and wisdom, and just use your instinct. Because you know, most of y'all I know have been around in your profession for enough years that you've got great wisdom, great instinct. Follow that, right? Be on the lookout for the odd transactions, and then the soft explanations of why it's different, right? And then make sure, just double check it, right? Never hurts to check it. Talk about using your wisdom and experience. Look at the details, and then when you know there's a problem, act quickly. And the quicker you act, typically the better recovery you're going to have. So I'll tell you a quick little story. When I used to work at a bank before I started going to law school, and back then you could deposit funds in a bank. It would take several days before it would clear, and it's called check kiting. It's fraudulent. It's wrong, right? It's against the law. And so as we were trained, right, in the bank years and years and years ago, I hope statute of limitations is run by this. You're obligated to raise the flag as soon as you know that there's a problem, right? Because every day bankers are looking at, even today, they're looking at, sometimes now probably computer, but still some brains are looking at it. They're looking at transactions in most accounts. And if it pops up on a report, you know, you're supposed to look at it. But what they told us back then was, now don't be the first to yell, because you want to make sure as the check is supposedly clearing through the banks, you want to make sure you get your funds, right? You need to yell, but don't yell too quickly. This would be a little bit different. Act quickly here, because the quicker you act, hopefully the more protection you'll actually have in actually either getting paid or getting your materials back. But again, that's just some side advice. So what are federal law, what's the red flag? Well, there's a red flag policy. It talks about looking for a pattern, practice, or a specific activity that indicates that there's some kind of identity theft or fraud. And again, most of the examples that I've given you have to do with either identity theft or fraud. And so that's why we want to include some in there. And again, we've talked about this recently. I just wanted to use it as a reminder for you because it really does help. Even though there's federal law about it and there's also state of North Carolina law about it, it really helps you with your business to sort of slow down and make sure that you have the basics covered. And I know some of y'all have written policies on identity theft. And if you don't, I would highly encourage you to get one. We can help you with it. I don't mean to make that as a sales, but we can certainly help you with that if you need one. But it detects warning signs of identity theft or fraud. It hopefully prevents the identity theft within reason from happening, and then to mitigate, obviously, the damages that it could cause. Again, it's usually opening new accounts or someone pretending to be someone else, billing, customer service, collection. So those are things you typically see, right? And again, I'm not going to go through all of these because we've talked about them some, but you do need to educate your employees. If you have a red flag policy and you need to have a record of having that protection, because in North Carolina, if you don't have a policy, a written policy, and have some education about it, you could be liable for damages, and that's definitely, you don't want to do that. So look for suspicious activities or documents for personal identifying information. If there's some suspicious account activity, looking back at all of those examples that we gave you, all of us probably could look at it and go, yeah, you could tell that was going to be a fraud, right? Or that's wrong. Most of the time you could probably tell that, not always, probably every single time, but it's certainly possible. Again, if the information you're getting just doesn't match or there's something that's really crazy about it, slow down, hold up the order, hold up the transaction, and make sure that you feel comfortable with it, right? Again, you've got this information in your handout that you should have already received, so I'm not going to go back through it again because we went through it the other day, or I think about a month ago. Look for notice from the industries that you're working in. Obviously, maybe customers might know about something, or if you hear it on the news, look for that, right? Or if customers complain about something, start digging into it. If the customer says, I didn't order that, right? So hold up. Look for the documents or any other information that you think might be wrong or not correct. Again, I hope this is helpful to you. This is a short webinar compared to normal by a few minutes, but we really want to make sure that you get the knowledge of this because it seems like it's going up. And again, I'm not saying this from a political standpoint, but there are some people that believe that that the U.S. is going to have more of this kind of problem just because of what's going on in the world, right? And it's just more prevalent. And it's happening because of computers, and it's happening because of access to information. So be really careful about what you're doing there. We hope this has been helpful to you. Thank you so much for dialing in. If you have questions, please feel free to reach out to us and let us know. And we look forward to seeing you soon. Thank you so much.